What's going on, traders? Shark here. Welcome back to the start of the month futures market analysis. In this video, we're going to break down ES, the S&P 500 NQ, the NASDAQ 100, walk through the current market structure, review key levels that matter, and take a look at some other macro data points that could drive price over the next 2 weeks. Now remember, the goal here is not to predict every move. The goal is to prepare. We want to understand where buyers are in control and where sellers can step in, where risk starts to build, and what scenarios could force us to adjust. At the start of every month, I like to zoom out, clean up the chart, remove the noise, build a focused game plan for the first half of the month. So here we're going to look at the levels, structure, macro backdrop, the risk factors that could shape up the next leg here in ES and NQ. As always, we're not here to chase. We're here to prepare, execute, stay sharp when the market gives us the setup. So let's get into it. Reminder, of course, that this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. Let's take a look at the economic calendar for the start of the month. Definitely a few things that I want to pay attention to. And so let's pull that up here. Okay, and pretty quiet week. We've got initial jobless claims on Thursday, the 4th at 8:30. Going to be paying attention to that. And really the main blockbuster for me, Friday on the 5th. NFP coming out 8:30. So, we've been talking about how the labor market's really important right now, and so these numbers are going to be front and center for all traders. So definitely that is what we really want to be cognizant of coming into the end of the week. But other than that, some small things: ISM manufacturing, ISM services, factory orders on Wednesday. Nothing really too crazy, but like I said, on Friday, that's going to be the big thing we want to pay attention to. All right, so let's open up the monthly chart here on ES and see what we can take away from that. I'm going to start off, as always, with the blank chart, so that way we just have that clear picture of what's going on. Now, this huge rally that we've had from the lows, and this is going to be something I want to point out to you guys, because the tech sector really has been driving this rally, and the RSP did just make a new all-time high, but if you will go back and notice that SPY and ES is way above where RSP is. So we've had a little bit of concern with some breadth, and we'll go into that later when we look at some of our other data points. But I want you to notice here, okay, huge candle here to the upside on the monthly, and May as well, filling out a huge candle to the upside as well. But look at the size note, and I want you to remember this: the size of the candle here in May on the monthly chart versus when we take a look at the tech sector in NQ. With that being said, still massive rally. We had that pullback, of course, with the geopolitical tensions in Iran. However, never really broke underneath the 20 at all on that monthly chart. Still pretty spicy here. We started to see some momentum shift here on our momentum overbought, oversold indicator. However, hasn't really shown the full regression down all the way to the other side. So still overbought here on the monthly, and waiting for this to potentially resolve like we saw a few years ago, but that has not come to fruition yet. With that said, a new higher high, and from the monthly chart perspective, there's certainly a break of structure here that really sticks out, right? And it's right here. So as long as the bulls are able to hold over this, and I'm not a big person in levels. I do prefer that supply and demand, but as long as we hold that May monthly low and hold these structural highs here that we have broken, really no issues from the monthly chart perspective. So we can come down. The monthly low for May is 71.99. We can just probably call it 7,200. And we have these lows down here. Let's look at the month of October. The high is 69.53. So as long as that area holds, really, it's all free and clear for the bulls. Wouldn't mind a pullback right here, and this would be very nice right? And that's what we'd be looking for overall until proven otherwise. If we start to break underneath and come back and retest, and it's actually shown that this turns into some supply, well, then we'll be starting to sing a different story. But as it stands, would I want to be, if I had missed this rally, would I want to be getting in at the highest high? No, definitely not. I'd be looking for those pullbacks in here to be able to position myself in a long-term sort of way for the continued rally up higher. And if this holds, I mean, what's really keeping us from 8,000 on this boost, right? I mean, it's right there, whole number. Of course, we'd have to break over this monthly high in the, this is just the start of the month candle. We don't know where we're going to get here. One thing I will mention though, and we've talked about this before, market's mode of price delivery, right? Running or resting. Now we've had two huge moves. I mean, over the last 2 months, what is this candle? Almost 775 points in April, and now in May, I think this is about 400 points. Yeah, 396, 95, basically 400 points here in 2 months. I really still would not be surprised to see some rest come into the market and potentially see a month or two going sideways. We are coming into summertime as well, where occasionally volume can slow down. Now we still do have a lot of geopolitical risks and talks going back and forth. One day we have a deal with Iran, the next we don't, going back and forth. So that's yet to be totally finalized. With that said, all things being equal, I really wouldn't be surprised to see some sideways action and some balanced price range to start to create and form. Maybe we form a bull flag here as well, high and tight, but it really wouldn't surprise me after the last 2 months us going up. Now, what is this? Over 1,000 points on ES. So watch out for that. But as I mentioned, as long as this area holds on this boost, really no issues for the bulls whatsoever. And I'd be generally looking for adding into longs or looking for new longs up in this area if we do come down and push. Some nice confluence there with that monthly 9 as well, which is sitting right at 70.66 as it stands right now. All right, let's get into the weekly chart and we'll be able to see this area that we broke a little bit better, right? And if you wanted to come in, over on the monthly, it's going to be a lot bigger now. But if you want to come in on the weekly and bring your risk level or zone down a little bit lower, this really would make sense as well to me, down into 70.77. Say that 3 times fast. And 69, we'll call it 69.30, 69.28, anywhere from that area. Look to the week high of back in March. And you can see the highs here from, what is it, the week of the 26th in January. And what is this, the week low of April 20th here as well. So you can see a clear zone here and the 20s right there to back you up, as well as the 9. One thing I will point out here, 2 things actually. One, we've gone full circle here on the weekly. Now we're back and getting in the spicy territory. I think we're up at, what, 12 or 14? Yeah, 12.4, starting to get definitely overbought once again on the weekly. So that's definitely something I want to be cognizant of. And let's look at the distance here. We've got that weekly 20 down at 71.20. And let's see where we are right now from the highest high. And that is about 540 points, 535 points away. So definitely a little bit extended from that 20. Really wouldn't bother me, or I feel like it would be good for the bulls to have a little pullback, test these 2 areas. Does that mean I want to run in full margin short? No, but I would be expecting for us also too, if we go with that idea of the markets after this run. I mean, we've had 1, 2, 3, 4, 5. I think it's 9, 6, 7, 8, 9. Okay, now smaller candle here, but 9 weeks of continuous up candles. I mean, it's getting a little crazy. So still with this momentum, sideways action, very, very possible in my opinion. And another thing to note, that we can't see the volume here, but another thing to kind of give credence to that potentiality is, okay, we can see the range on this weekly candle, huge, huge, huge. But what's happening? This one's pretty strong, but what's happening right now? Starting to get a bit smaller, right? So I think that that's a kind of another small, possible hint that we're going to see that sideways action. These moving averages probably going to need some sideways consolidation to kind of drift up and then kind of loop over like so. Let them catch up to price and do something like that. We see price hang out like in here, like so, and then we can make that leg up into that 8,000 level potentially on ES, right? All right, so let's take a look. Have some other levels that we were already working with. Let's pull them up here. Got them, and let's go into the daily chart. Take a look at it from that perspective as we start to break it down and get a little bit more granular. Okay, so let's pull it up here and boom. All right, and really nice confluence here. You can see that the high that we broke over from the 14th of May, the daily 9 sitting right there. So that's nice. Definitely an interesting area where I would be potentially looking for longs around that 75.40 zone. But again, look where the 20 is and look how far away price is from that. Let's just see right now. And Globex just opened about 175 points away from the 20. Definitely still a little bit extended. So again, just for me, if we don't get that true pullback into any of these, that sideways action would make sense to me. Give a little bit more time for these moving averages to kind of come up and maybe flatten out and get a little bit closer to price. I'd feel a little bit more comfortable with that. A little extended for right now. But that being said, from this daily perspective, longs into 75.40, definitely interested right there, as well as 75.15, 75.14, however you want to splice it, and then down at 74.88. We start to get underneath 74.88. Okay, I think that we'll give it a couple more days, but let's see if the 20 starts to give us a double point of confluence there for us. If we do go sideways and we start to pull back, that could be a really nice entry as well if we have the 20 there. But if we do find that acceptance underneath 74.88, 85, watch for lower prices. 74, 74.40, 74.38 could definitely be an area that I'd be paying attention to. Maybe coming down. Whoops, that's not what I wanted. Maybe coming down kind of into this general area, something like that. So if we do see some type of pullback, this is all just conjecture, then maybe we get the long from there and then we take off, something to that effect, right? Okay, so that's what I am looking at here on the spoos. I will say underneath 74, got to give the bears, although they've been basically useless, got to give bears a little bit of information as well. Underneath 74.38, let's look for the lower part of this range down to the 73.40, 74, 73.52, and then all the way down to 73.35, thereabouts, right here at these lows from the 8th of May. So there we've got our zones, got some levels that we're looking at for the daily chart. All right, let's get into some day trading levels for ES and see what we can take away from that perspective. And definitely had some nice moves today in the market. So let's see how they played out. Okay, here we are. Boom, move. Okay, so what are the bulls now? We did have a bit of a rally up. A couple of tweets from Trump caused the markets to push up higher, right into the 76.30 area, which I did have a zone at, and then we proceeded to sell off into the close of the day. So if I'm looking from the bullish perspective, what would I want to see here? Well, definitely 7,600 definitely needs to hold, but I would like to see the bulls start to recapture 76.06. That will start to very well, the first step to neutralize this downtrend, but really over 75.12, 76.12, 76.15, that's gonna really neutralize this downtrend that we have created, getting back over those short-term moving averages, the 9 and 20 sitting there as well. And from there we can look for trades back up into these three highs, equal highs right around 70, what is it, 76.20, 76, it got a little bit higher, 76.22 in that area. That's what I'd be looking for there. So what that would look like, right, we come up, have a bounce from here, maybe we get rejected, then maybe we come up, right, and this would be the key spot, right here, coming over. Now that trend is really getting neutralized overall, and from there if come back, show that it's supported, and we look for those longs back up into right this area right in here, right, and you can see also this is kind of where we truly broke the structure and gave us that down move, right? We had this balanced price range right here, and this was the break, and then we were down. So from here, we could say a little bit of supply up in that area, right? And from there, we could also make the bearish case to say we could reject, right? So you could also look at it from that perspective as well. So what would the sellers want to see? Well, as long as we hold really underneath this 76.12, 76.15, I think that they are okay. So anywhere hanging out in this zone, got to consider that potential redistribution for more downside, but the bulls really need to get under, and Globex did just open. We are underneath 7600 currently still, so if we still hang out underneath the 7612, it's not really going to make a difference. But this would definitely be the most bearish scenario if we just hung out underneath 7600. Probably not. I mean, we're a bit extended now, so I would think we'd be probably bouncing. But underneath that 7600, we're pretty much at the spot where we need to hold. I believe opening range from the Monday session was right around this 97 as well. So that was the 30-minute high of the day's session. Let's see if they break it, but I wouldn't be going short here personally, looking for either bounces up into this area for a little bit better risk to reward. That being said, looks like if we get underneath this 75.97, coming down into 75.94, VPOC, at least on this 10-minute 2-day chart, sitting right there at 75.93. So see if that gets tagged. Big structure over here. You can see multiple points where we've had reactions at this 75.94. So there is a potential long setup there as well, at least for a couple of points, maybe back to the 97s or back to the figure at 7600. I'd probably be shooting for that 7600 personally overall, but either way, you've got pretty defined risk right here if we do come down and test. With that being said, underneath VPOC, underneath 75.90, watch to attack these lows. 75.87, back down 75.83, and then the lows from today's session right around 75.80 would be my path for the sellers. So there you have it, everything I'm looking for the next couple of weeks on ES. Definitely will update if there are any other levels or anything changes either on my profile. So yeah, check that out. But as far as I'm concerned, this is pretty good for now. All right, let's get into the NASDAQ and let's take a look at the monthly chart. Now, remember what we were talking about earlier, and let's get into a blank chart. When we wanted to see that monthly difference. Oh, interesting spot here, though, right at the 200 SMA on the 10-minute. Okay, with that said, okay, now let's look at the difference. We're on the monthly chart here for the tech sector. I mean, MU's really been the darling. Intel's been amazing. Can you believe now that AMD is more expensive than NVIDIA? I didn't have that in my bingo card, but here we are with NVIDIA really losing its luster and other names kind of taking over. Structurally, though, we have the same situation. The monthly lows, definitely going to be looking at that. And as long as we hold here, just the same situation as far as the structure, boom, right? Any pullbacks into this zone, got to be still considered bullish. One thing, though, that I did want to mention when I mentioned that May candle and the difference, look at the size. Very more comparable to the same size in range And that's really, you can see how only a few names in the tech sector with this AI craze going on has been really leading this rally. We'll take a look at breadth later on as well, just to see how spread out this rally really is, but it is, in my opinion, concentrated just in a few names, which is really not what you want to see overall from a bigger picture perspective. But you can, again, you saw how much smaller the ES candle was for May on the versus NQ. Just these are way closer. Massive rally, and here we are at the start of the month. So we've got our zone that we need to look at, and if we want to get those levels, we can just come down here right around 2690 we'll call it. And then the lows from the month of May, which is 27,536. So there's your zone for demand. Nice confluence, just like on the SPOOs with the 9. For me, watch out, still same scenario. Watch out for that run. Now we're going to go for the rest. Let these moving averages start to flatten and catch up with price, as they definitely have a bit of that extension overall. All right, let's pop into the weekly chart, see what we can take away from that perspective. And again, same scenario. If you want to bring it down a little bit lower from the weekly, okay, this is, of course, the monthly is going to be more for investing or long-term type of stuff. And if you want to take it down, you could take it down to something like this. That is well and good, and that gives you 27. We'll call it 27.25, and we'll still keep it around 26.90 there. All well and good. So nice confluence here with the 20, but still pretty extended. I'd love to see a back test. The 9's the first spot. The market's been so strong, so that could be, definitely a spot. We do have a small balance range here that we could, use as well. So as you can see right there, right? Expansion, rest, expansion. We just broke out of this weekly flag. So let's see if we get that compression again in volatility. But here you go, nice confluence with the bottom of this balanced price range, this flag that was formed, and that weekly 9 sitting at 29,640 or 645. There you go, there you have it. So I'd be much rather, interested in buying something like that than the highest high right here. For the little bit more adventurous, certainly could use these highs, the weekly highs of the 11th and the 18th as well. I mean, the market's been so strong, you could just say that, and then we look for the high right there. We're already at 30. Okay, we're already looking now, probably, 32,000, right? I don't see that would be that crazy if everything continues and we don't get any crazy news updates. But there you have it. And let's pull out some of the charts here, some of the levels that we did have already, and you can kind of see this overall. Okay, let's go into the daily chart. Boom. Okay, here we are. All right, still for me, love for this to catch up, give us that extra confluence at around 29. What is this, 486, right? And just look for the highs here from the 11th, the lows from the 14th. There you go, pretty much the highs here from the 21st as well. That'd be the last line of defense, other than the 20 for the bulls. But pullbacks into 29, 790. Structurally beautiful. We've got the 9 there as well, just above. That's over 30,067. But structurally speaking, I would much rather prefer something like this, and then look for longs or coming into the third level, 29,632, 630 might as well call it, and last stand at 486. Underneath that, looking for a little bit lower. We think we could make a pit stop here down at the 511 low, and I just want to mark that off. So I think if we do start to find some daily acceptance underneath that 29,486, 29,220, we'll call it right there. Definitely potentiality underneath that 220. Watch for the lower part of this range to be potentially engaged right by 2,900, 28,930s, all the way down to 28,715 thereabouts. Maybe even got a little bit lower to down to 640, but you get the idea. Right in this zone right here, this was what I would be looking for next. And you know what we can do? We can put in a EQ right here, right around 28,810. All right, so that's what I'd be looking for overall. And let's draw out some potentialities. Let's do the bulls first, just based on the structure, not on the moving averages. We've got one, boom. We've got two, boom. Oh, we've got three, boom. Maybe we reject, maybe we come up, reject, then we come down, then we do that, boom. Right, so those are some bullish scenarios. Let's talk about some bearish ones really quick and just map them out. Right, we start to break through, come back, retest, boom, maybe we come back up again, hit here, maybe then we come back up and retest, then we make that new lower low, right down into 28,930. Now in this area, definitely be looking maybe some potential buys here. I mean, that's not a bad scalp, or that's not a bad swing trade at all. Or this is really the spot where it comes up and makes its whole way back up, you know, like so. Another bearish scenario, right? If we break underneath 930, 932 down to 810, potential buy zone again. Right? And last area before we have to start really changing the tone, 28,713, 700. Might as well just call it 28,700. But could be a pickup there for a buy down. Let's say down like this. If we get something like that. Another potentiality. So we'll see what happens when we get there. Definitely far away. But just wanted to map out those scenarios. But this is definitely, you know, a path for the bears. And if we break, well, then we can start talking about different levels. But we'll get there when we get there. We're nowhere near there yet. But definitely just want to be aware of all potential scenarios. All right, let's look at some day trading levels now for NQ and see what we can take away from that perspective as we move into the week. Okay. Okay, so what will the bulls need to do? Well, definitely need to hold right here at 30,475. Hold this, right? But we really need to see this rally all the way back up into here. If we start to get back over, what do we need? We need over 30,550. We see that? All right, now we're starting to neutralize the trend. Maybe we come back to this value area high there and then break over, right? So we want to see some acceptance over this level, totally neutralizing the trend. Then we can look for trades up higher and retest this structural breakdown right here where we balanced, right? And same kind of as the SPOOs, we could reject from there. But that's kind of what I'd be looking for overall. If we recapture the 30,550, looking for 600 of course, but ultimately 30,630, and see if we can't retest this area again, where it could be a sell or a target for a long. So we'll see what happens there. Definitely want to pay attention to this little area right around that. Yeah, that's 600, 590 area right here. So I'm definitely going to mark this off. Just like so. Boom. Right, so we'll see what happens. What about for the sellers, right? Well, as long as we hang out and stay underneath here, right? Well, then we can look for trades back down lower. Definitely would want to see that final acceptance underneath 30,475. Get back underneath this 10-minute 200 here. We want to see price hang out here, like so. And then we could look for lower down 30,400, 30,415. Next spot, VPOC just right underneath 20,000, or excuse me, just right underneath 30,400 at 30,000. 396. Start a break under that though. Watch out. 30,000, 360. 865 possible. If we start to break under this here, you can see multiple points of contact right around that 30,000. 370 underneath that. Well, then we can go ahead and look for those Monday session lows back down here in the 30,300. So that's what I would be looking for if we did start to break down. Maybe we break down to here, maybe we bounce, then we come down maybe a little bit here, maybe we bounce again, and then we come down and attack right these lows right like that, right? So that's what I'd be looking for from the short-sighted perspective. All right, so I think here we do have a good game plan for ES and NQ on an intraday level, on a daily level, weekly, monthly. We've been over it. Bulls overall still in control, but of course we certainly can make some money on these moves to the downside as well on that intraday basis. All right, so now let's take a quick look, because we were talking about breadth. Let's take a quick look at RSP while we're here before we get into more of the macro stuff. We'll just take a look at the, okay. All right, so we finally did break over these equal highs right here. So as long as RSP here equal weighted S&P, as long as we hold over 205, I would say we're good to go. Nice confluence with the 20 moving up there. Starting to get a little overbought, nothing too crazy, but starting to. Definitely keeping an eye on that. But if we were to pull up SPY, and it's not going to be the right chart, but let's just get to it for... you can see, I mean, these were pretty much these highs. You know, this is the same thing, more or less. Let me see when this was. The end of, okay, it was here. This was in, okay, yeah. So right here, this is February. And this is February, right here. So back when SPY was basically through, what is this, 695, and look how much it's run from there. Now we're at 720 or 760. So this is 63 points, $63. Where here, what is this, 20 bucks? It's like $4. Not even $20. So there you can really see the breadth disparity overall. So I just wanted to point that out for you guys. All right, let's go into some of our other data points that we like to look at here to help formulate a game plan for the markets. All right, let's see what we got here. We're going to start off, and speaking of breadth, start off with the SPX A50R. How many stocks in the S&P are trading over their 50-period moving average? And you can see here we are still holding over the 50. We had this downtrend line that we did come up to and now have rejected. 50 is really my pivot, so we want to have 50% of the stocks in the S&P trading over their 50-period moving average, and we are right there right now. If we start to get under, we'll start to just pay attention to that. But I think, you know, you would expect if this was entire market participation, that this would be much higher, probably up in that 70% range, right? But we only have a few names in the market driving this rally right now, again with the techno rally. And here on the 200, a lot slower moving, of course, but we're at 54%, so be watching that very closely. New highs versus new lows. Again, you can see you'd expect this to be a lot higher if this was a true broadening out rally. We're not having that. We're at 33%. If it gets under the zero line, that would be a little bit of a warning sign. Not there yet, but again, all the breadth metrics kind of relatively meh just saying that it's 5 names, 7 names, 10 names really driving this overall. All right, let's take a look at the junk bonds because we have been watching this divergence play for a while on the bonds and with no real resolution to that divergence. One of the canaries in the coal mine I like looking at. But what happened today, big sell-off in the bonds, in the junk bonds. And let's activate this downtrend just to kind of put it out right here. Very close to touching where we need to. Let's see, this will start to give a little bit more of a warning sign if we start to get under 79.50, but certainly a divergence here, a new higher high right here and a sell right here. So the divergence is still trying to press itself, and it's been no secret that yields have been a big issue, but not really bothering the market too much. So we'll take a look at where they are. I know the 30-year, I don't really watch the 30-year because the 10-year is much more important. That's what really, that's the benchmark. But I do know the 30-year got over 5% or got over 5. And I think the last time we saw that was in 2007, late or mid 2007. And I don't need to tell you guys what happened in 2008. So very interesting there. All right, let's take a look at the bonds, though. Big bounce, okay, and they started to get a bit extended here. I mean, we were down in the gutter, but now, and I have been bullish on yields. I mean, I hate to say because it's a kind of a bearish, scenario, but it just seems the yields are, there's nothing really telling me here that this is a bullish chart. Obviously, we've got our swing high and a lower high and another lower high being put in perfectly here. The 10 to 7-year bond projecting exactly pretty much right at that moment. The short-term bond really didn't even get close. Another perfect rejection here on the 3 to 5 year, 7 to 10 rejecting, and the 10 to 30 and 20. Yeah, it got over the 85, 25. Let's see if this holds. This could potentially come back as long as it holds 85 here on the 30-year on TLT. Holds 85, 25. I mean, this could potentially just come down and then bounce back up into the 86s. Over 86. Well, we'll just call this over 87. Over 87, we can see some more relief from the yields and potentially a stronger rally in bonds. But even if it came up into 86, I'd kind of be expecting a rejection back lower from there. But got a bit oversold, and now we're seeing that counter trend rally, but they are still selling them. Nobody trusts the U.S. government to pay their debts, and I don't blame them, being 40 trillion in the hole. The other thing is that China and Japan have not been buying American debt and treasuries as much as they used to, and that's another concern overall. Okay, let's take a look at credit spreads. I think that they are still saying, yeah, risk off here. Little perk up here on our SHY to HYG. Let's see, I mean, still bearish. So this is still saying risk on, risk on. Let's see, a little tick up, but let's see, it's not over the 50. This is still in the gutter right here. And here we are on our bond ratios right here, trying to break under the 50. This one's interesting. Okay, breaking under the 50, that's a good sign. This is going to be our TLT here, because that was the strongest ratio. This is the 7 to 10, I believe, and the 30 and 20. This is a little bit not concerning. This is a good sign for the bulls, I would say, but this is a bad sign here. These aren't even touching. This one here touched the 50 and is bouncing. This one didn't even make it. So as long we'd have to see this recapture the 50, and that would really give a clear picture for higher yields. These shorter term ratios are holding. I'd still be bullish on TNX overall and expect yields to go higher until proven otherwise, but at least a little bit of good sign here. This very well could just pop back up. I really wouldn't be surprised to see TNX have a little bit more of a bounce tomorrow, but let's see what that chart looks like when we get there. All right, we have been looking at some of this divergence in the transports, and I think the last time I did a video we did look at the transports right here. And I did talk about this being a potential long trade. I actually took this one, and I did go along the transports. Beautiful retest here on this structure take, and boom, and that is really good in the long term. Let's see if that can come back up into the 20, what is this, 21 840 area. Might see some resistance in that area, but look at this divergence here. The Dow finally making a new all-time high. Transports, now this was interesting here because transports made this huge rally, kind of a blow off top, and then coming back down to retest. While this was happening, the Dow wasn't even anywhere near all-time high. Now finally the Dow's at all-time high, and they've switched spots. Now transports are not at all-time high. You'd want to see these together. So this is a little bit of a warning sign, but the bulls are coming in structurally where they need to. So, although they're not in lockstep, the bulls are doing what they need to try to, support the transports here, and kind of this J hook kind of setting up. So that's not a bad look either. But I would definitely be a little bit cautious as we rally up into this zone right here. And as a matter of fact, now that I look at this, it seems like it'd probably be a good time to potentially get ready to trim a little bit on the transport. So I'm glad to see that idea working out nicely. All right, let's keep it moving around. Let's look here. We talked about the yields and the dollar. Here we are. Okay, so the 10-year didn't get to 5 like the 30. We got to 4.6. Got way up there, and now cooling off a little bit and hanging out still above 4.4. So we'll see. I mean, for me, as long as it's holding 4.3 here, that's 43, really no issue. Let's see what happens tomorrow if they get some price moving back over 4.4, and then we would look for these yields to move back up higher, 4.6, 4.7, and certainly, if we get up at that 5 on the 10-year, that is not a good sign. But we really needed this little cool off, right? We were overbought here for sure, and price got a little bit too extended away. The dollar keep on knocking on this big pivot. I'm wondering when the dollar is really going to start to matter. I think I mentioned that in the last video. Probably over 100, but now multiple times that it's come up against this 99.38 area that we've been watching for rejection. So until the dollar gets back over that, we would have no chance for 100. So until really we start to see some daily acceptance over 99.40, 99, and certainly got to get over 99.55 here, and then we can talk about 100. Until then, this is probably a short, and it could see the dollar fall back down into the 98.60, 98.50s as it stands. So let's see if that rejects, and that could be good for the markets. We definitely don't want the dollar moving up. Okay, let's keep moving it along here. Let's take a look at gold and what that is doing. Okay, I've been watching this one right here sitting at the 200 as well. It still can't get over the downtrend, but we are holding the 200 on the daily right here. A bit of a falling wedge. First step, well, of course, we've got to hold this 200, which is sitting at 44.69, but we ultimately need to see this price break over the downtrend, come back and retest. Then I'd be targeting up here in the 78.80s, all the way up into 79.52. If it gets over that, okay, well, we'll get there when we get there. But if it gets over that, then we probably would attack these highs. We'll see what happens at 5,000 an ounce, but 5,200, maybe 5,300, and then these highs right here. Up, and that was only if we get up and over this spot right here. So just mark that off. Boom. So I think that's going to be the break right there, 79.52. So got to see up and over, and then we can look for those higher prices up here. Okay, nothing from there. We already went over the dollar. Okay, let's see what they say. All right, still. Let's see what happens here. I mean, this has been moving up. This is moving up, the inverted ZT. This is the short end. This is the 2-year note. If this moves up further, that's going to be telling us that the chances of rate hikes are increasing. If this is falling, then we'll look for that it's the market's pricing in the chance for rate cuts. But huge spot here, and I think we're really just waiting to see what the new Fed president has to say. And Trump, said that he was looking for someone to cut rates, but Warsh made it pretty clear that he is not going to be the president's quote unquote puppet, and is going to go by the data, which he should. And I'm sure all he's doing is reading what happened in the 1970s and replaying the mistakes and things that Volcker did during that time. One thing I do want to mention, though, and why don't we take a quick look at the oil futures? As we've mentioned here, now we keep on getting this back and forth about whether or not we have a deal with Iran. We don't have a deal. Paper futures here, though, under $100 a barrel, but still very elevated. I mean, before all this started, we were down here in the 60s a barrel. So this, is still elevated oil. Usually this takes we're starting to come up on when, because they're still, we have come into the reserves of our oil supply. But I believe the last shipments of the oil came through before the shutdown, right at the end of April into the middle of the first couple of weeks in May. So now we're going to start to see slowly again, prices are already starting to come up on the inflation side. Of course, we had PPI super hot last time it came out, and CPI creeping up above 3% again. But this type of oil shock, it takes time to go through the market, and I don't think that we have seen it back yet. And if you study some history, if you're interested in that kind of stuff, I would implore everybody to go back and look at what happened in the 70s with the Yom Kippur War with Israel, and of course the Middle East and all that, and the oil shock that happened there. And something very interesting, it took about 12 to 9 months after the initial oil shock. And then just go back and take a look at the charts, and you can let me know what happened in the comments about 9 to 6 to 12 months after the initial shock in the 70s from oil. And go look at what happened there. So like I said, these kind of things take a little bit of time to work through the market, and of course saying specifically exactly when they bare their teeth and show the damage that they've done, no one can say that. But like we say, history, it doesn't repeat, but it often rhymes. And I definitely implore everybody to take a look at what happened in the markets in the 70s when we had a very similar oil shock overall. Still, I mean, we're in 92. It's not that far away from 100 a barrel. And again, where we came from in the 60s, this is going to bleed through the market, fertilizer, everything. Oil really is the lifeblood of the economy. So, just be cognizant of that. Okay, let's keep on moving along. Let's see put call ratio. Anything? Okay. Well, we're trying to break out of this balance, but nothing really sticking out here. No strong signals on the put call ratio. Slightly offsides, but nothing really too crazy here. So I'm not going to put that into anything. Let's look at our oil volatility really quick. Okay, broke beneath the 72. All right, let's see if this gets underneath 50. I think if we start to see some daily closes on the oil volatility underneath 54, I think that would be a good sign for the bulls and for lower prices in oil. But that has so far yet to be seen. We don't have a deal finalized, or at least one day we do, and then Iran says we don't, and then we do, and it's just back and forth. So updates on that as we get it. Seems like every time the market's gone down, that Trump just puts something on Truth Social, and then the NQ rallies 200 points in one direction to save it. One thing that we did want to look at, the gold rally, and we went over this maybe this was 6 months ago. When this rally was really going hot. We had priced the S&P in gold here, and we're actually starting to get into a fair price when you price S&P in gold. So that ratio is finally getting back together here. As you can see here, we're at a fair price. So this is kind of normalized. which is interesting. And let's take a look at the VIX. What do we got? Kind of just a melt across the board, right? So look at this contango here. This is great for money managers. They love this. Good contango, so nothing wrong with the VIX future spread. Right at our pivot here on the regular VIX, right around 16, 15, 75. As long as this holds, volatility can still be an issue. So let's see, it held so far today. And if this still can continue to hold, I still think VIX can go back up into the 19s and 20s, which would be good for day traders. 1-day VIX melting down underneath 15, looking pretty weak there. And the volatility of the volatility, VVEX, underneath 100, underneath 93. For me, I don't want to, if I'm bullish on the VIX or I want vol to increase, gonna have to see this over 103, 105. So until then, I'm not really too concerned or thinking that VIX has too much legs to walk on or stand on right now, unfortunately. But let's see how the rest of the week progresses. All right, and I think that that's everything I wanted to go over here. Nothing really going on with the fund feds rate or anything. So yeah, I think that's everything that I wanted to go over personally. And that's it. That's the game plan for the first half of the month. We've covered some key levels on ES and NQs, bigger market structure, some macro backdrop, the main risk areas I'm watching over the next 2 weeks. So, now the job is simple, right? We can stay patient, respect our levels, let price confirm any idea that we have before putting any risk on. The market's going to move how it wants to move. And our edge comes from being prepared for any scenario that before it happens and not reacting, emotionally after it's already played out. So keep your charts clean, know your invalidation spots, manage your risk, and stay focused on your execution. And as always, a prepared trader is a profitable trader. So plan your trades, trade your plan, and I'll see you guys in the next update. Thank you so much for joining. It means a lot to me. Pat yourselves on the back for doing a little prep. That's what it's all about. And if you haven't already, I'd really appreciate it if you subscribe to the channel. It's much appreciated. It's free, helps me out, and that's all I've got. So I'll see you out there in the markets, and until the next update, take care.